let me share my screen here real quickly, and we can take a look at some things that I think are important that happened this week. Okay, so this is a chart of the S&P 500. It's the Vanguard version of that. VOO is the ticker symbol, and this is the last month. You can see last week we dropped about 2.1%. This week we gained about 2.7%, and then the last month we're up about 2.2%. So what has happened this week has a lot to do with what actually happened last week. So the Federal Reserve met. They talked about raising interest rates. They talked about the possibility of cutting back on their bond purchases. And the market didn't like that, at least, in the short term. And it kind of sold off. And we ended up with, that 2% downturn. And so what happened this week was kind of just the opposite. And the Federal Reserve came out, had lots of different interviews where they were talking to Fed governors, and they were much more positive about what they were going to be doing. The rate increase isn't coming until 2023 at the at this point, and that such too. So I think what's important here is to understand. This has been a pattern the Fed has done quite often now, where during their meeting week they'll say some things to try to get the investing public knowledgeable about the fact that interest rates are going to go up. And then during the next week, they try to kind of talk things up, and they don't want the market to go down too much or go up too much, and so this is part of their process, at least in my opinion. And so one thing to keep in mind about the Federal Reserve, though, and just to kind of put it into context, if we look here, this is the Fed fund rate going back to the mid 90s, and so we went from 3% to 6.5% prior to the 2000 downturn. So we had a 40% downturn here, and they had to lower rates to kind of stimulate the economy. And then we went from 1% all the way up to 5.5%. And then we had the 2008 downturn. And so, we ended up with really low rates, a little run up before 2018, and then the pandemic. And if you look now, we're at basically zero. So keep in mind that during these big rate increases here, the market still went up for a long time before it finally went down. So they're talking about raising rates in 2023. And honestly, even if they're wrong and they have to raise them sooner than that, I don't think it's that big of a deal. You will see volatility like we've seen in the last 2 weeks, but you're not going to see the market fall apart in most of the cases that we've seen here in the last, basically 25 years. You're looking at a scenario where you need to see a lot more rate increase. I mean, this is 21 rate increases in a row before we had the 2008 downturn. So that's really critical as far as that goes. The other thing to take a look at this week that I think is important is just, this is from Morningstar. We call this the 9 boxes. And you got large cap and mid cap and small cap stocks. You have value stocks, you have core and growth stocks. And if you look here at this past 1 week, we're up in the growth area all the way down. And so the growth area was the area that did really well last year, driven by all these new investors, and we saw tons of money coming into that area. And now we're starting to see that come back. But it was not doing well from the middle of February until about the middle of May. And I have a pet theory as to why that might be happening, and I'll show you here. So if we take a look at the last 3 months, and we look at Bitcoin, for example. So Bitcoin really started to kind of take off in the middle of February, and I think people kind of left, these stocks, these growth stocks, innovative technology and clean energy and those things, and they went out and bought Bitcoin. Well, unfortunately now Bitcoin has kind of really been falling. You can see here it's down almost 40% just in this 3-month period, as well as a lot of the other cryptocurrencies. And one of the things, and I'll show you, this is our innovative technology ETF, XITK, that we use in our portfolio. And this is a pattern I've seen quite often here. It hit its low in this time frame on the 13th of May. And if you look, it kind of correlates with that cryptocurrency falling apart. So I think they're coming back, and they're buying the things that they bought last year that did so well. And you can look at the same thing. Here's our clean energy piece, PBW, that we use in our portfolio. Again, hit its low on the 13th of May. Again, that correlates to the big drop that's happening there in cryptocurrency, and it's had a nice rise. So I think, that's the other component of it as far as that goes. If we look at, the last piece of my summary is just this really nice movement that we had yesterday. They announced an infrastructure bill as a collaborative agreement, 21 senators, 11 Republicans, and 10 Democrats. And I think the market really liked it. You saw the market go up. And I believe that the things that the market would like about that is, number one, it's smaller than was originally intended. It's 1.2 trillion instead of 2.2 trillion. And so that takes the pressure of possible inflation, down, which the market is concerned about. It also spread out over 8 years instead of 5 years. Again, that takes that pressure of inflation off. And at least in its current structure, there is no taxation increase on corporations, which of course the market loves. Now we'll have to wait and see what happens, right? This is the beginning of the process to a certain degree, but at least they got somewhere and the market was pretty excited about that. So anyway, I think that's one of the things that, we really would look at here as far as that goes. Really what happened with the Federal Reserve, this infrastructure bill, and kind of cryptocurrency falling. Those are the big subjects that I saw this week. And I think, this is a really big deal for the market, having that kind of run up that we're having right now. There's a lot of strength that I'm seeing. I think that can carry through for quite a while here. So anyway, that's my summary for the week.